Welcome to the Commercial Real Estate Academy podcast, the podcast dedicated to simplifying the commercial real estate industry for the masses. Each week, we sit down with industry experts to dissect the many facets of commercial real estate and extract valuable lessons you can apply to your business. Whether you're a new or seasoned business owner or investor, the Commercial Real Estate Academy podcast will be your go-to resource for all your commercial real estate needs. Now, here are your hosts, Raphael Collazo and Jeff Walston.
Welcome to the Commercial Real Estate Academy podcast. I'm your host, Raphael Collazo, here with my co-host, Jeff Walston. How's it going, my friend?
It is going wonderful. I'm excited to finish up a few projects this week and for the weekend with my kids. So ready to enjoy the colder weather. What about you, Raphael?
Yeah, same. Yeah. So I was actually in New York City last week for a commercial real estate tech conference and just trying to catch up on work this week. It's been kind of hectic. And yesterday I actually bought a winter coat for the first time in a long time. Obviously, I lived in Puerto Rico for several years. And when I first moved over here, I only had one winter coat. And I've kind of worn that over the last couple of years. And I realized yesterday, I was like, all right, I need to buy a new coat and pulled the trigger. And so I did. And yeah, I'm excited for my new coat. And if you see me in public wearing it, you'll be like, oh my gosh, Raphael, that's your new coat.
Welcome to the cold.
Welcome to the cold, right?
Of
course. Yeah. Well, actually, today we had a phenomenal guest, and it was not cold at all, actually. The discussion was quite lively and animated. And our guest today was actually Adam Cloern. He's a commercial appraiser with Valbridge Property Advisors. It's a appraisal company actually that service not just Kentucky, but they're a regional company. They service Indiana, Ohio, and Tennessee. And really our discussion today really focused on the commercial appraisal process. Their advising company primarily focuses on, or he does in particular, focus on affordable housing communities. And so we kind of dove into the commercial appraisal process, what that looks like, what the difference between residential and commercial appraisers are. We spoke on, the process and hurdles that you have to overcome as you're going through the process of trying to figure out what the appraisal of a property is. We dove into the different tax credits that are available for those who are looking to get in the affordable housing development space, the 4% versus the 9%. And then at the end, he kind of provided some feedback as far as those who are looking to break into the commercial appraisal career field. And, also just overall good advice related to, wanting to invest in commercial real estate. So I thought it was a great discussion. I thought we learned a lot from his insights. What do you think, Jeff?
He's definitely a value add when it comes to commercial appraising. And I think for all of you guys listening or watching on YouTube here, this will be good little tidbits if you are interested in the appraisal field or if you just want to learn more about commercial appraisals in general. So
yeah, 100%. And not only that, but if you're looking to invest in commercial real estate, understanding how the appraisal process works and what appraisers look for is going to help you immensely, in particular because most commercial banks, if not all commercial banks, are going to require some sort of an appraisal to be conducted. So understanding how that works so that you can, work with commercial lenders to purchase commercial properties will be very, very valuable. So if that's something that's wanting to be in your wheelhouse, then it's definitely something you definitely want to learn more about. So definitely stick around and learn a little bit more from Adam. So without further ado, let's go ahead and dive into the podcast. So, hey, Adam, great to see you this fine morning.
You as well. Thanks for having me on.
Oh, yeah, of course. And for those of you guys who don't know, Adam and I, and Jeff was there as well. We met at one of our friends, Tyler Chester. He put on a multifamily meetup group and had someone talk about affordable housing. And Adam is a appraiser and primarily focused on the affordable housing sector. And so we're pretty excited to have him on to talk a little bit about the appraisal process and then, dive in maybe a little bit more into the affordable housing sector as well, because it's one that is extremely needed across the nation, not just here in Kentucky. So again, thank you so much, Adam, for stopping by.
Absolutely.
Awesome, man. So what we usually like to do in these episodes is we like to ask the person across from us to tell us a little bit more about themselves. So could you just give us a high level overview of who you are and what you do?
Just a quick thing. I was always interested in real estate. I came out of Xavier University in 2007. So right when the financial crisis recession was coming, there was really starting actually. Got into it really because I was doing some template work on Excel for this company, that Allgaier company, which is now Valbridge Property Advisors. But got that started and kind of went into it in 2007 going, okay, this is a good way to get into real estate. learned property values, and I eventually kind of went into the affordable housing division. So ever since then, I've been working, and we do, focus really in the region, Kentucky, Indiana, Ohio, Tennessee, but we also go nationwide and do appraisal work and market demand analysis. So it's a very interesting field.
Oh, sure. So from the market demand side, you're just going in to see what the feasibility of developing some sort of affordable housing community is in a particular area, given certain demographics. And
correct. A developer come to us saying, "Hey, I'm looking to build a project in this area." In Kentucky, it's based on a scoring system when you're talking about affordable housing and tax credits in the 9% round. And so we'll do consultation work beforehand saying, "Hey, this might be a good site based on all the amenities in the area and the rents that you can achieve." And then we just go down that line and say, "Okay, yeah, you can do this many units of this unit type at these rents." And you just kind of build out, help the developer, I should say, build out what is hopefully a solid project.
Oh, for sure, man. That's awesome.
Yeah. Do you also do commercial appraisals, or?
Technically speaking, that is on the commercial side. We
okay.
The only thing my company doesn't really do is actually like a single family home.
Sure.
We'll do a whole subdivision. We'll do a scattered site where there, 50 to 100 single family homes, all as one development. We'll certainly do that, but we shy away from doing truly single family appraisals.
Oh, okay. So can you dive more into like what directed you from, let's say, residential to more like commercial on the affordable housing? What's it?
Well,
was there a key moment, or?
So my father got involved in this firm in the very early 2000s, and quickly found out that there is this affordable housing section of real estate that a lot of people don't want to deal with because there's a lot of regulations and there's just a lot of details that you have to understand. In doing so, though, you get to specialize, which I think we all know that the more you get into your careers and whatnot, specializing is huge. Yeah. And so he was able to start this division, and I really got involved because of the Excel templates at first, really just trying to help automate some of their systems. And I got a little taste of what this was in regards to me being interested in real estate. And so I kind of got brought on that way coming out of school.
That's awesome. Yeah. And maybe if you could elaborate a little bit on the differences between residential and commercial, because that's one thing that our listeners are primarily commercial driven. They're either brokers, developers, investors, et cetera. But delineating between the process of a residential appraisal versus a commercial appraiser, if that you could elaborate a little bit on that, that'd be awesome.
Residential wise, generally speaking, you're doing either single family homes or between 1 to 4 unit apartment units or complexes. Anything above that, you're going to be more on the commercial side. For residential, you're going to use different forms and whatnot. We have pretty extensive appraisals. My typical report is probably 100 to 120 pages. So it's a very different report style and writing.
Oh, for sure. Yeah. And I would imagine on the appraisal side, on the residential front, it's a lot more, like you said, a template. It's like very heavily regulated. So there's very specific things that you're looking at as you're going through the process of trying to assess the property value. And, on the commercial front, I mean, if you try to appraise a gas station versus a, affordable housing community versus a multi-story office building, I mean, the things you look for are going to be completely different. And, each building is going to be very unique. So for those guys who are listening, I mean, it is a project by project basis, and kind of the 120 page report is kind of a reflection of that. It's like, okay, well, we got to go into all the different dynamics of this particular opportunity and determine what a potential value could be for this option. So,
on top of that too, our reports, we really start at, the macro level, and we'll start, give a description of what the market area is and whatnot, and say you're working in Kentucky. So you're going to give description of Kentucky and Louisville MSA, and then you go into a neighborhood analysis, whatnot. So it's much more detailed. It's much more comprehensive of a report.
Oh, for sure. Yeah. I know. I just took a course it's called CCIM 102, which is market analysis for, commercial real estate investors and developers. And that's kind of the things you look at. It's like you take a macro level of the area you're looking at. So let's say you're looking at an apartment community in Texas. You could say, okay, what's going on in Texas on a state level? And then you go micro more into Austin, and then you go micro even more into the specific area that you're looking at, because the different suburbs of Austin are going to be different. I mean, there's different dynamics, there's different demographics, there's different, components that are beneficial for one use, but that may not be beneficial for another. So if you're looking at industrial property in like a industrially zoned area, that could be a highest and best use for that area. But let's say you're looking at industrial property in the middle of a residential community. I mean, it doesn't usually happen, but again, it's one of those things where the market itself is going to be dictated by all these different dynamics. And as you start getting a little bit more narrow in your focus and trying to get an understanding of what that property type and how it's going to function in that environment, I mean, that's ultimately how you're able to determine what the value or what the opportunity potential is.
Absolutely.
I'm kind of curious now. Can you walk us through the process of what an appraiser would do to assess, say, the affordable housing community? How would that look?
And affordable housing is a little bit different. They're more so really geared towards the income approach, particularly with affordable housing. Rents can only go so high. There is a maximum gross rent that they can only charge. So that's why it gets into, tax credits and syndication, all that stuff, which is certainly a different ballgame here. But that's really, you're going to start off by not only looking at market rents in the area, but then you had to establish some sort of max. But then you're going to also talk to other tax credit developments in the area and get those rents and occupancies, and really just determine, on a new project, the feasibility of where rents are. Of course, right now, I think we all know that rents have skyrocketed over the past really 2 years or so, a year and a half, I guess. And that's kind of the thing that we're playing around a lot with the developers and whatnot is, can they push the rents more? And especially with construction costs, you're seeing that the rents keep on going higher. So it's an interesting time right now.
Yeah. And that makes it interesting for an appraiser too, because looking at historical trends is probably going to be a lot harder because, it can change within 6 months. I mean, over the last 18 months where the prices were 18 months ago versus today is ridiculous. I mean, it's unbelievable. So trying to kind of give a set value for something that's kind of like a moving target, I'm sure has been somewhat of a challenge, if I'd imagine.
Historical is always great to have and whatnot, but I do feel that we in the real estate industry have had to kind of look a little bit more forward about how things are really going to start playing out, especially with interest rates probably going to increase whatnot here in the near term, and how rents are going to do, employment levels. That all really plays a big part in at least apartment units and whatnot, and what I deal with on a daily basis.
Yeah, and for what he's referencing regarding the interest rate increases is the Fed, I think it's every 8 times a year or something, they meet to discuss the different factors within the economy and then determine whether or not they're going to be starting to tick up interest rates over time. And recently, I think there was a report released that by I think the end of 22, they're going to hit their employment metrics and try to start raising some of the interest rates to kind of quell some inflation. Because again, I think we had a 5 or 6% inflation rate this past year, which again, when you pump trillions of dollars in the economy, it's kind of inevitable. Yeah. Well, one thing I wanted to ask you, and this is more of just curiosity's sake, obviously you're working with the affordable housing tax credits. For those of you guys who are listening, there's actually a 4% tax credit, and then there's a 9% tax credit based on the discussion that I actually listened to at Tyler's event where we met. So could you kind of elaborate a little bit on the differences between those, and then how does that affect the value of a potential property?
Generally speaking, the differences would be 4% of much larger projects and 9% is a competitive round process where you had to get these market studies done. You had to send them in by a certain date. Just taking Kentucky Housing Corporation, for instance. This past year, I believe the due date was either August 19th or the 20th, I think. And so leading up to that point, developers are trying to find sites and trying to find, these sites, again, are based on, amenities that are nearby as well and scoring basis. So it's really hard, and you got to find a great site to be able to build a good project on there. So that's how that kind of worked. The 9%, the 4% is not a competitive process. It's you send in your information, and it's either you're approved or you're not. And in regards to valuation on the real estate, it's more, again, it comes down to the income approach and whatnot. So it really, that's going to be played out on how, what kind of rents you can achieve and everything else in that regard.
Do you factor in the tax credit into your income approach analysis, or that's after the NOI, right? I'm just
we do actually value the tax credits on these projects, but that is not part of the real estate valuation, I guess, itself. We would value that separately.
Oh, okay.
That's where I was interested, because some of those tax credits are absurd, like the actual returns you could achieve as a result of implementing some of these, these affordable housing communities. Because from my understanding, 4% means 4% of the construction or the project cost over a 10-year period. So that means 4% per year, or how does that work?
4% is kind of funny, and actually until recently the 9%, but it's not really truly 4%. I think it's 3 something at this point. Okay. But yeah, it is dispersed over a 10-year period. And I have actually recently heard where some state agencies are front loading that payment, saying give you, say 50% over the first 5 years and then spreading out the rest over the next 5. So I think some state housing agencies are getting a little creative about how to provide the most funds up front, or at least over the first couple of years of a project. Now, again, those credits also don't come into place until after the project's placed in service.
Correct.
So that's something to think about.
Yeah. And like you said, I mean, I think that is probably an incentive from the state to try to get more people involved in the development of these opportunities, because if you can give me money sooner rather than later, I mean, again, discounted cash flow, it's like, is $1,000 10 years from now going to be the same as $1,000 today? No, it's not. So if you can front load the tax credit on the front end, it makes it more attractive to investors, because it's like, okay, I can get paid out quicker. Therefore, I can get my initial investment out sooner. Therefore, I can put that money to work elsewhere. It makes it a more attractive opportunity for having to go through this whole process of trying to get this large community operational and manage it and everything that comes along with the process. So,
is there any instance where it would be beneficial for the seller to order an appraisal? Can you is there any of those out there, or the benefits? Yeah,
I'm doing an appraisal. Generally speaking, most of the time we do an appraisals, our clients are banks or the government or some sort of government agency. But right now, I'm actually working on a project for just a buyer of a very large tax credit / HUD Section 8 property, and he just wants to know what the current as-is valuation is. And so, but, again, if you're trying to work with a bank, usually it's going to be the bank that's going to engage our services.
Okay. Sure. And how does that look like from a cost perspective? Because obviously similar to, I've dealt with appraisers on various different scale projects. Like, how does that fluctuate? Let's say you're looking at a 80 unit affordable housing community versus a 300 or 350 unit apartment complex that is affordable housing. How does that range in pricing?
You get to a certain point, the size, it's more of what is our client looking for? Are they just looking for something on the as-is basis, or are they looking for something that is proposed to be renovated? So our structure is more of, we're going to give a certain fee, whatever that might be, and that can range from, $1,500 to $6,000 or more. It just, again, depends on the project. Then we'll give a timing. Early this year is probably 2 or 3 weeks that we were giving quoting. But now it's, I think I just quoted a 5 or 6 week turnaround. So it's definitely gotten very long. I mean, we're busy right now. So it's, couldn't be happier.
Yeah, man. We had to get extensions on a few of my deals because of the appraisal. It just was taking so long to get people out there. And again, it's a good thing for commercial appraisers because they're super busy. But, it took us, I think, 6 weeks to get commercial appraisal out. So it wasn't a massive multifamily property that we sold, but it took them about 6 weeks to get out there. So we had to extend the contract. And
I know even some of our smaller appraisal projects that we're working on, I mean, we're still giving 4 weeks a minimum. We're slammed right now. So, and we have been, quite frankly, since the pandemic. I guess about a month after that pandemic started is when we really started getting busy.
Awesome, man. And one thing I wanted to elaborate on real quick, because at the beginning, we kind of mentioned the income approach versus there's other types of approaches as well. So the way you assess a potential opportunity, is it primarily, just straight the income approach, or do you also take into consideration like a comparable approach where you look at other properties in the area and try to get a feel for it?
Absolutely. We'll do all 3 approaches. If it's a new project, let's say market rate, we'll do income, sales, and cost approach. We'll certainly give all that. For a tax credit development, doing a cost approach really doesn't make sense because the cost is going to be higher than what the value is of that property. And that's where the tax credits come into play. But we do provide the sales comparison approach alongside the income approach in our reports.
Awesome. Yeah. So for the newer development properties for affordable housing, you typically weight it more on the income, the potential income once the property is actually in service.
Correct. I think most investors will look at it that way. For a multifamily property, you're going to weigh the income approach the most.
Oh, for sure. No, I understand. And especially because, like you said, the cost approach, especially on some of these newer developments with prices being what they are for construction, is just, I can only imagine what the disparity is between what the current income is. And given the fact that it is an affordable housing community as well, there's probably a cap, like you said, on rents. So there's only so much you can raise the rents. And, therefore, the income approach is probably going to be lower than what you could achieve in maybe a fair market rate environment.
Correct.
So.
Yeah, and there's been a lot of developers. The construction costs increasing so much recently. Yeah, they're going after a lot of gap financing, which I believe the federal government, is starting to provide and send down to the states. So, you know, again, the rents have gone up, construction costs have gone up, but developers still getting things done, and so just keep on moving.
Awesome. So again, like we said, we have people who come in for our listeners who are, all different types of professionals within the commercial real estate space, and also individuals who are looking to get into the commercial field, regardless whether that's brokerage or development or even appraising. So what advice would you give to someone who's interested in maybe getting into the commercial appraisal field, and maybe some of the lessons you've learned through your experience that you think would be beneficial for someone to consider as they're looking to start their journey?
Being an appraiser, you're able to, at least I'm lucky enough to be able to, and I work for a great company that allows me to do this, but I've got a very flexible schedule. And so if I need to go do something or take care of something, I can go do it as long, basically as long as I get my work done. I'd kind of start there. If you don't really want to work in a big office building and whatnot and go downtown, you can find a different career path. And I guess just allow yourself to sit there and, what's a good way to put it? I've been able to hang out with my family a whole lot. And especially at this time, I got 2 kids. And so it's allowed me to do that. If you're really focused on wanting to build your own career, you can sit there and do it yourself, or you can work for another company. There's a lot of appraisers out there that just work in their basements and work, do a few projects a week, and that's that. And they're very happy. So if that's something that interests you, I go to the Appraisal Foundation, and there's some education resources, and you find appraisers and find appraisal companies in your area. And I'd start there.
Oh, for sure. Yeah, I know. And starting off going to the Appraisal Foundation, are there any licensing requirements as far as commercial versus residential?
Yes, I've got a certified general residential. So you're going to have different certifications for whether you're single family or on the commercial side. So that'll, again, explain a little bit more at the Appraisal Foundation, which way you need to go and what classes you need to take, and kind of what order and how you want to do it.
As far as like the upfront cost to do some of that stuff, if you know what it would look like as far as the licensing and everything is concerned?
Every class is a little bit different. I can't say, one might be $500 and one might be $1,500. So it's going to be a couple $1,000 to really get in, because you have to take the courses and you do have to take tests and whatnot. The good thing about it is you can take courses online, or, especially since pandemic, they've put all the courses in. So that's very easy to do. And, a lot of them have teachers there that are available, but you don't have to actually talk to a teacher. You can just, do the course itself, which is super convenient, actually. Do that, or go to a course. They're opening classes now again. So go meet new people in those courses. And that's how I got to be able to meet a lot of my fellow appraisers. Just go take a class, and a bunch of people being there.
Oh, yeah. And I'll even echo the fact of trying to get out there in general and meet people in the industry. Like, we met at a real estate event, I met you, and now we're talking on a podcast. In your case, if you're looking to get in the appraisal side or looking to break into any type of field within the commercial real estate space, going to these meetups where people congregate that are in the industry just creates that. It's an environment where you can, build those relationships that ultimately can bring you into, the appraisal side or the brokerage side or the development side or whatever.
Absolutely. At least at those, you'll kind of get a feel for, okay, this sounds fun, or I could do this on a daily basis. So it's a great way to do it, is go to those meetings. Absolutely.
Yeah, I completely agree. So to start the round out process on this, one of the questions we like to ask is, what is one of the best books that you've ever read?
I've actually got it right here. The Alchemist by Paulo Coelho. I've read it a few times throughout the years, and then I read it again, I guess late last year, just kind of, whatever. And I think it's just a good story to say, hey, you might always be searching for something else that's out there, but you might be missing exactly what's in front of you. And, I think that's a good tip.
Oh, yeah.
Have you read that, Jeff?
I haven't read The Alchemist.
It's a good one. It's kind of brings it full circle. It's like, be grateful for what you have in front of you, because in reality, we're all given unique skills, unique gifts, unique circumstances. And, some may be different than others, but, what you do with what you have is really ultimately up to you and can give you the most satisfaction. So, yeah, I think it's a great book. I think it's one of the top selling books of all time. Yeah, it's crazy. I think it sold like 70 or 60 million copies or something worldwide.
It's a very easy read. It's, not a extremely long book by any means, but it's just something I think is great for everyday life.
Oh, for sure, man. That's awesome. Yeah. So, man, Adam, we really want to thank you for stopping by the podcast. Again, we just truly appreciate you sharing your wisdom and insights with the audience. What we usually do at the end of the episode is we like to ask our guests to provide something to the commercial real estate treasure chest. Essentially, this is a repository of resources that we make available to our listeners that have, helpful PDFs, Excel sheets, really anything that can provide value to our audience. They can go to this particular page and download these items, and they use it in their, brokerage side or the development side, or even the appraisal side in your case. So I was wondering, what exactly do you have to bring for the audience today?
I've got this. I was reading about just trying, obviously affordable housing tax credits, and it's a very, there's a lot going on in that industry. And so I have provided some, what I thought was a pretty simple, easy, but detailed read about what tax credit are or tax credits is. And then the 9%, 4% just kind of gives a good detail about how it's played out and how it's used in, I guess, development of real or affordable housing.
Oh, for sure. Yeah. And for those of you guys who, are interested in that space, I mean, it's hugely needed in this country. I mean, the affordable housing crisis is real, especially recently with rents raising as high as they have. So, if you can fill some of that demand, the demand's there. And I know a lot of states are trying to allocate additional funds to, cover the shortfall of inventory. And so, if you're looking to do affordable housing and across the nation, in particular in markets where, rents are above average, it could be a phenomenal opportunity. And obviously, hopefully this PDF can give you at least a starting point from which to build off of. Absolutely. So thank you, Adam. I appreciate it, really.
Yeah. Thank you again. We really appreciate you coming on the podcast. I know you've added a lot of helpful advice for people, especially looking to become an appraiser. Hopefully they can benefit from your advice. And so that being said, how can someone reach out to you, get to know you better, maybe utilize your services, or just generally talk to you about maybe even becoming an appraiser?
Absolutely. Well, I work for Valbridge Property Advisors here in Louisville. Just to give out, the phone number is 502-585-3651. Call for me. I certainly helped, whether you want valuation services or some sort of a market demand analysis report, or if you're interested in becoming an appraiser. Certainly, we're always looking for qualified individuals and would love to talk to you. So get a hold of me anytime.
Oh, for sure. And we'll include all his contact information. So his phone number, email, the website as well of Valbridge, so that you guys can have a reference. It'll be included if you're watching this on YouTube in the description below. If you guys are listening to this on an Apple podcast or Spotify or any other podcast medium, it's going to be in the description notes as well. So awesome, man. Well, thank you so much, Adam, for stopping by. We really do appreciate your time. For those of you guys who are watching this on YouTube, please like and subscribe to the channel. It helps with the YouTube algorithm, ensures more and more people can hear this message. As far as the podcast format is concerned, so if you're listening to this on Apple, Spotify, whatever medium that you're listening it on, again, leave us a 5-star review and let us know what you want to hear. We always love hearing about your feedback regarding the different topics that are out there pertaining to commercial real estate. And if we see one recurring on a regular basis, we'll try to see if we can bring in a guest to talk about that as well. So again, thank you all for stopping by, and we'll see you all next time.